So there's a really hot topic going around in the Tesla community today, and well, it should be, given that we're looking at 8.8 coming up, and that is the question of how much should Tesla be charging for FSD connection or connectivity on a monthly basis or a weekly basis or a per mile basis, or how should all that work? Should they change the current subscription rate of $199 to something like $99? Or should they change the current uh, buy it forever lifetime version of $12,000? Should that be closer to $6,000? And should the two be interconnected? So lots and lots of conversation going on about this morning. And in fact, Elon Musk has been participating in some of that, responding favorably or not. And I think he might have, I should have double checked this before I came on. I'm sorry I didn't. I think he might have run his own poll. Anyway, let's assume that the continuing cost for full self-driving is fairly close to zero. From an accounting perspective, there may be a lot of amortization, in the cost of that, let's call it $200 a month, in order to recover the old costs that got them here. Elon's talked about $10 billion in costs, but even those might be kind of small in comparison to even $200 a month. Now we got ongoing costs as well, because you're going to be adding more compute, you're going to be processing more data. Engineers will still be involved to get the thing to more and more nines. But I think we're talking about close to zero. Now, I've suggested that they have some kind of ability for robotaxi customers to be able to contact a human through the entertainment system. Ultimately, not on a regular basis, not like it's kind of like when you're doing this with a major corporation and you're on the phone and you want to talk to a human, but you have to go through layers of conversation before you can get to the human, something like that, unless there's an emergency, potentially like the Cadillac system. If there is a crash, if the car is involved in some kind of a crash, the car would know that it's in a crash, and it could immediately put a consumer rep on the entertainment system to talk to the passengers. I think those kind of things really make sense, and that could be an ongoing cost if, in fact, is always somebody going to be there to back up whatever's happening in the car. And I just think that makes sense. Let me know in the comments below whether you think something like that makes sense. Anyway, those are the kind of ongoing costs that there might be. So the most of the profit, so if you have almost zero cost, then it comes down to just figuring out, okay, what is the best and smartest way to charge people that will give Tesla the most amount of profit? Now, I continue to believe that you need to have some kind of variable cost. And we'll look at a couple of models of that in a minute. In my family, we're only talking about less than 1,000 miles a month. I shouldn't have to pay the same amount of money that somebody's driving 2,500 miles a month, in my opinion. So it's the simplest and, to me, the most practical, and this should be information that Tesla can certainly gauge, would be to have a charge by the mile. Now, if you want something easier to model, you can go back to the old flip phone and or smartphone method from years ago, where you charge, let's say, $100 a month for 1,000 miles. And then if you go over those miles, you end up paying an additional fee. If you stay under those miles, then maybe you get a bank, and those miles get banked for future months. And then, you could buy $200, but you get 2,500 miles. So you're paying less per mile if you get into a higher tier initially. That's, of course, how cell phones did it for years until they became really super established. And now they've simplified things. I'm not, quite frankly, it's been so long since I cared. I'm not even sure how they do that anymore, but that would be another method. I don't know if it's going to be $99 a month or it's going to come down. Maybe they'll test it at $99. But what do you think should be the best take rate? Okay, here's Nicholas Gibbs. He suggests something like this. He says they could go by you could make your own decision. you could pay 30 cents a mile, or by the month, 99 cents a mile, $99 a month, or by the year, $1,000 a year, or for the vehicle life, 4,750. So you'd have these choices. You could jump in, and when I think what he means by the mile would be that 30 cents would be by the mile that you turn it on, as opposed to even by the mile that you drive. So that's a possibility. Now, 30 cents a mile seems really high to me, but I think he's just throwing out ideas here. And then that would be for consumers, but enterprise, you're using it as a robotaxi, then it would be, say, by the month, $1,500, and by the year, $12,000, or vehicle life for $50,000, things like that. And then there's a guy named Zongwen 2005, that is ZHONGWEN 2005, if you want to follow him on X. He says subscription fees, his thoughts, a 1 month subscription would be $129. A 6 month subscription would be $119 a month. A 12-month, $99 a month. A 1 week would be $49. A weekend subscription would be $20, covering different needs of customers, eventually leading to a 12-month subscription rate. Anyway, lots and lots of ideas being thrown around. Love to hear yours in the comments below. Certainly, you might want to, if you're involved in X and you care a lot, you could get on X, and there's a lot of chatter going on about that right now. Okay, this is Randy Kirk. If you like this kind of content, please hit that like button. It helps the show. You just got to know that little motion of hitting the like button. It helps a lot. Subscribing helps also, not nearly as much, but it helps you because it keeps my channel in front of you when you look at your subscription list. And then the best thing, of course, is to hit notify, because later on today, Cern Badger will be back. And Cern, he's going to be bringing, this is going to be all about Tesla. I think it's going to be about robotaxi, and it's going to be about the potential impact on the world of having robotaxis. And then Larry should be with us tonight in the Good News Friday broadcast. A little dicey right now with him being all over Europe. But we'll see how that works out. Hopefully he's going to be on with us. All right, this from, go on down and join Patreon. Thank you to those who have joined Patreon this month. I'm so excited to see quite a few folks coming onto Patreon in the last couple of weeks. All right. This is from JP Morgan Chase this morning. I'm sorry, this is Barron's talking about the various banks this morning. So JP Morgan Chase had a mixed bag this morning. They reported first quarter earnings of $4.44 a share, topping analysts' expectations of $4.17. Revenue was $42 billion, roughly in line with forecasts. Net interest income was $23 billion in the first quarter, down 4% from last quarter, and the stock fell 2.4%. But there is other things going on there with some kind of investigation, and so that might be why it's down this morning. Wells Fargo posted earnings of $1.20. Topping expectations of $1.06, down from $1.23 a year earlier. So their stock is down this morning. Citigroup recorded first quarter profit of $1.58 a share, and that's higher than the $1.18 expected. The stock is going up. And then State, last time, this is an hour ago. State Street rose 3.5 on better than expected first quarter revenue, and they beat on everything. And BlackRock also beat, and their stock was also up nicely. And then we also had Morgan Stanley down 0.3% in pre-market trading after falling 5.3% on Thursday. Wall Street Journal said that federal regulators were probing the investment bank over how it handles wealth management clients who are at risk of laundering money. All right, I tell you what, we don't normally talk about all the bank stocks, but this is the beginning of earnings seasons, and I thought it was important to take a look at what is happening in the earnings season here on this. It's kind of, a lot of people consider this to be like the first day of earnings season. Well, there's been a lot of earnings being reported over the last 10 days, 10 or 11 days, but this is kind of the kickoff. If you're paying attention to these kinds of things, as the earnings season goes, so is the market going to go, especially. Well, no, always. Okay. I was going to say, especially this year. No, this is always going to be impactful on the markets as we see how earnings are playing out. So what would you look at those earnings and you'd say, okay, mixed bag so far. Market isn't buying it. Market hates it. Market is down strongly. but I'm not sure that's the only reason. We'll talk about that in a minute. So I'm thinking maybe I'm starting to get a much broader audience, because just yesterday I said that the rally in copper might not really be the canary in the coal mine right now, as it typically people think of it typically, kind of one of the commodities that is most critical. If the economy is doing well, you need more copper, and therefore that would be a good indicator of the future. And Larry Goldberg talks about that, but he's not alone on that. Lots of people consider that. But I said yesterday, this copper increase might really have a lot more to do with all these the AI increase that's going to require all of these data centers to be built, which is going to take a lot of copper. And so we have this morning coming in. I forgot who said this. I think it was Market Watch. Anyway, copper's bull run should continue for at least the next 3 years, fueled by global supply challenges and hot demand for the metal to power energy transition and artificial intelligence technology, industry analysts said. I'm sorry that I didn't write down who said that. So as with every single, this is me talking again, as with every single data point, we have to be careful. Is this really something that's indicative right now of where the economy is going, or is it really a special situation? Like recently, I'm sure maybe you've been paying attention, that cocoa is way up. Last year, it was orange juice, which is still up. These are special circumstances caused by specific situations that are going on. So you've got to be careful not to follow false leads. So Morningstar has this, and maybe they're also watching the channel. The CPI report sent the Morningstar U.S. Market Index down 1% on Wednesday. In the fixed income market, the yield on the 10-year Treasury note climbed nearly 20 basis points to 4.55 as the Morningstar U.S. Core Bond Index lost 1.1%. The quote here is, "We're back to a regime where higher interest rates will likely pressure markets," says Jeff Schulz, head of economic and market strategy at ClearBridge Investments. He thinks stocks trading at elevated valuations will give investors a little more pause. Goes on to say, markets remain resilient thanks to a strong economy. Schulz points out that a resilient economy, including the robust job numbers and consumers continuing to spend, has helped stocks climb higher than the Fed's last interest rate hike in July, even though rate cut expectations have been continually delayed. That's allowed investors in the market to shrug off this inflation, he said. An overbought market where stocks trade at higher prices than their fundamentals can support could dent returns in the short term, but the long-term picture is rosier. The market needs a refresh and digestion period. We don't believe the digestion period will be more than 5 or 10% pullback that may last a couple of months to a quarter. We think this is a pause in the expanding bull market. Pressures on valuations could also begin to ease. A landscape with fewer rate cuts will likely act as a headwind to further rises in the valuation of stocks. Dan Kemp, Morningstar's Global Chief Research and Investment Officer, wrote last week. He added that it may take a while to see the impact of this change. Well, okay, so I've been saying that now for a week, maybe 10 days, that the market may need a pullback, that we've gone a long way up here. I think we're talking 25% on this bull run on the S&P. And at some point, there needs to be a cooling off period. I keep asking folks if they think that we're going to go down more than this kind of 2% pullback we've seen. And most folks that I interview have been saying, no, it's probably all good. Well, the next 10 days of this earnings season probably are going to tell us a lot, but I continue to think that this market might need at least that 5% pullback. Now, here's about today. Today, the markets are down. I will check in a second, see just how badly, but people are saying, well, it might be this, it might be that, it might be these reports out of the banks. I think that it might be this. It's Friday. We're going into the weekend. The U.S. government has a high alert for terrorism in the U.S. this weekend, and there's a lot of chatter about Iran and potentially Hezbollah ganging up with Iran to have a major strike on Israel today or tomorrow. So markets don't like to go into a weekend with that kind of an international overhang. Certainly oil prices had spiked. We'll see if they're continuing to be up. But oil prices up, bonds were down, but so is the market, and so was everything associated that would normally bonds up means bond yields up mean prices down of certain equities. But this morning, everything seemed to be down kind of as a group. So let's see how that is working out now. Okay, let's start with Tesla is down $2. That's kind of where it's been all morning, kind of flatting around that $2 level. We've got the Dow down 240. We've got the NASDAQ down 116, S&P down 35. And the Magnificent Seven is got Google at almost even, up a nickel. Apple, again, up $2.90, getting a lot of positive press right now. The rest of the, NVIDIA, for instance, down $13. Also, the Cathie Woods all down this morning, is with one exception. Okay, so like I said, kind of everything down, with Apple being the standout because of a lot of kind of positive, not exactly news. There's not any news on Apple. It's kind of positive press. People are feeling like it's been beat down too much. Okay, so what are the percentages? Tesla down 0.97, or let's call it 1% this morning. Dow Jones 0.58 negative, NASDAQ 0.69 negative, and S&P 0.61. So right there all together in that same kind of position. Okay, let's go ahead and look inside. And what I call inside, it's not inside for you. It's in my brain that it's inside. Okay, let's start with those bonds. We have got dropping yields. Boy, a big drop in the 10-year, down 7 basis points to 4.507. So that is a big drop. Yeah, 2-year also down exactly the same amount. And the 2-month actually up this morning. So that would mean that the inversion is widening again on the 2-month 10-year. And the 2-year, let's just check it out real quick. It is right in that same. So we're back to kind of normalish on those yield inversions. When I say normalish for, I think it's got to be 20 or 21 months now that we've had these yield inversions. Let's go check whether the oil patch is still up. Yep, up $2 on both. So Brent is now at 91.66 and Texas Intermediate at 87. So that would be over $4, pushing towards that $5 difference, which recently we've seen, if there's Middle East uncertainty, that tends to spread out to around $5. And so that would certainly be true this morning. We've got natural gas down a bit at $1.75 and change. So we've got gold up another $50 this morning. Okay, this is where the Randy radar turns on. And there's a point at which, I don't care what's going on in the world, what's going on in the economy, there's a point at which some things get out past their skis. So you got gold now at 24.22, up over 30% from kind of the range it had been trading in. And so there is a point at which you have to go, okay, there's an opportunity here possibly for I'm not going to short gold. I'm not telling you to short gold, but I'm just saying it might have gone too far too fast. Silver up 4.69% this morning. Some people are saying, I haven't double checked this, that silver's run is even better than gold's run. Copper is up almost 2% this morning as well at 4.33. Following on my conversation about what's happening for copper specifically. But again, the commodities, some people are saying the commodities might begin to move. You got the dollar soaring as the European banks seem to be ready for some rate cuts. And so we'll see what happens with that. And then you've got Bitcoin down $305 as of this exact moment, flirting with going under 70,000 again, sitting at $70,044. Okay, if we flip back to Tesla again, just for that extra check, it's actually popping up a bit now. It's now only down $1.92, but looks like a trending up, as in fact the markets are trending down. Tesla has started to pop up a bit, so it is going counter for the moment. Okay, as you know, all of this can change very, very rapidly, but that's what's happening at this exact moment. Okay, as I mentioned earlier, we got Cern Basher coming up later, and maybe Larry Goldberg. Yesterday, Cern went over all of those different, you know how he does usually on Thursday. We look at all of the same kind of charts that Kathy Wood does. I mean, this is fascinating to me. I don't know if it's fascinating to you. We get fairly good response to that Thursday morning show. And he does some fun. He has some fun with it, with some cartoons. We talk some very unusual things. It's not 100% like a Kathy Wood deal, because he'll go into some very unusual stuff that he finds, but stuff that's kind of affecting the overall zeitgeist, maybe affecting the specific economics of the time, maybe affecting the stock market specifically. And then, of course, he almost always gets into some, which he did yesterday, into some specific Tesla stuff. If you missed that yesterday, I'd highly recommend that you give it a try. It's right here. There is the card. I think that's all I've got for you right now. So later on today, much more, including my new show where we look at what has Elon posted on X recently. That show will be up in you'll be able to see that in a couple of hours. All right. It's been great talking to you.